What is up, traders? In this video, we are going to be backtesting the continuation model that I've dropped on YouTube about 1 week ago. We will be covering the London session and the New York session for the past week of trading and see exactly how it performed. If you have not checked out the video on the continuation model, I do recommend you do so. I will leave a link in the description linking to that specific video so you can go into the nitty and gritty of the strategy itself. Other than that, right now we will start focusing starting on Monday the 24th of July. We will be backtesting all the way till that Friday and see how the strategy performed. I will be taking every single entry that the model provides. I will also give you some context and some possible confluences. If you are interested in this model and more confluences to it, then if you join the Elite program, you will get access to more confluences, which basically reinforces this strategy and this model. If you're interested in that, I will leave a link in the description to that as well. But for now, let's get right into the video. As you can see, I just created an FX replay session and I set my initial account balance to 100,000. We are now on Friday the 21st. So what I will be doing is I will be jumping to the next session. As you can see, we just arrived to the London session and right now we are clearly bullish. So to quickly summarize the model for you guys, we are basically looking, if we are bullish, for a bullish trend. We are then looking for this low being swept and then a strong recovery with a market structure shift. And after that, we will be taking an entry off of either the breaker block or off of the FEG. Now, for the exact details, I will have you refer to the video in the description. But for those who have watched it and understand it, pretty simple to follow. So enjoy this video. So I'm just going to play through price, and if I see the model occur, I will start talking again and I will show you exactly where I take a possible entry. We finally broke through that previous high. So now we are just waiting for one of these lows to go and then we could possibly catch an entry here. All right, as we can see, this temporary low, it just got swept really quickly and we had a really strong recovery to the upside. So now what we are waiting for is a market structure shift, which we do get. And then within this leg, if we take a look, we don't really have a really clean fair value gap within this leg, except for this one right here. So if price were to return to that, I would be considering an entry. But right now looking, it seems like price just basically left us. And if price were to come down here again, we would be violating this low right here. I would want to see this respected to actually catch the continuation model. So this trade becomes invalid. And as you can see, we have a really strong push down now, so I'm pretty happy that we stayed out of that trade. Usually when news like this hits and the market structure just gets all messed up and is just really to one direction, really explosive, I do not really expect to catch any more continuation trades throughout the day or throughout the session, but we will see what we get. So right now we can for sure assume that we are bearish. So now we're waiting for this low right here to be violated. And now we do get that violation right here. So we have a break in structure, but we do have quite a bit of liquidity resting up here still, as we can see. So no sweep just yet. So what I would be waiting for right now is a sweep of one of these highs for us to then continue lower. But given the discounted zone we are in right now, I would likely be sitting on my hands. So what I'm going to do is I'm going to skip to the New York session here. All right, so this is the New York session. We have some pretty bullish price action going on here. We just created this recent low, started pushing up, broke market structure with a displacement candle closing above that high. So that's valid structure. Now it seems like we are taking out that low. I would count this as a sweep. The wicks are also confirming that. So we have our sweep, which is our first criteria that we need. So a sweep of liquidity. Now we are waiting for a market structure shift, which we do indeed get. So what we could do right now is we could use our FIB tool to mark out the premium and discount zone. There is no real fair value gap here. So we are going to take an entry off of the breaker block. Now, if you are unsure about breaker blocks, that's also something that comes with the course that is included in the Elite membership. I'm sure you could also find some great resources online as well, but the way I use breaker blocks is really refined and personal, also backed by years of data. So I'm just going to use my version of the breaker block. Some of you might agree, others might not agree. I'm not calling it an ICT breaker block. It is just my personal breaker block that I use successfully. So for me, this would be the breaker block. So we are basically just covering the wick of this high right here and covering the last bullish candle. And that is going to be my breaker block. Because price is still in a premium, I would not be putting an entry on just yet. I would first like to see price displays a little bit higher, which we indeed do. And then right now it could be a really interesting entry opportunity. Also, we didn't really create any swing lows or highs within this leg. So for me, this would still be the valid low right here. And all I would be covering, because we do not really have a fair value gap. So what I usually do is I would cover the low of the candle before the fair value gap here. But in this case, because the fair value gap is quite high up and we are within this breaker block, I will be placing it comfortably below the breaker block, which would be this candle, or let's say even this candle. And let's see what that does. For now, what we could target is the low hanging fruit, which is going to be this high right here. So let's set this order, a limit order for 1% account balance. And let's see if we indeed get tagged in or not. Seems like we do get tagged in. And this is a winning trade. So this resulted in around 3R, which is quite decent for our first trade with this model. So now again, we're just waiting for a low to be swept for us to then have a market structure shift and continue trading to that side. Now, as you can see, it looks like the market is flipping bearish. We are closing with displacement below low that we created right here. So we could see this as a market structure shift or a change of character even. So let's now see if one of these highs that we created gets violated with momentum so we can catch a trade to the downside. It seems like right here we create relative equal highs, so no sweep there. And right here we also didn't really see a violation of a previous high. And if you do not really understand immediately what I mean by highs and lows, I know that this can be pretty complex. I am just looking at basic market structure, right? And to me, it's basic market structure, and to all of the elite members in the elite program, it would also be pretty basic market structure. It's super easy to understand. I do not overcomplicate things. If you are interested in that, it is also included in the course. And now it seems like our market structure is shifting once again. And if I take a closer look here, let's see how the structure looks. Looks something like this, right? And this is where our structure shifts. And now we can assume that we are bullish. We just had a really explosive move, but we are still respecting that low that we created. So we are still bullish at this point. And now it does seem like we are starting to flip bearish again. And we had this sweep over here. But still, I would first like to see this low being taken out with displacement before I can consider taking a continuation trade to the bearish side. So let's see what happens here. We do displace below. Now let's focus on that breaker block, which we do have right here. So we could for sure consider taking a short off of that. And I will be covering the candle before the last fair value gap. And let's quickly check our premium and discount zones to confirm. As we can see, this is in a discounted zone. We can definitely take this trade. And I always like to aim for at least 2R. So what I'm going to do is I'm going to be placing a fixed 1 to 2R risk to reward trade on right here. I'll be placing my order, 1% risk. And let's see what happens here. So we return to the breaker block. Let's see if we get stopped out or go to our TP. Right now, I would also be leaving the charts most likely because it is almost 12, it's almost noon. So I would for sure be done for the day, but I would leave this trade running until we hit like, let's say 2 p.m. and then would likely take my full position off. If we do violate these lows right here, at that point, I will be going break even. So I would be setting an alert there. As soon as that goes off, I would be moving my stop to break even. So that would be right here. So at this point, I would move my stop to break even, not really worry about the trade anymore, go about my day and then see what happens. So let's quickly play this on. And as we can see, this trade actually plays out just fine. So let's hop on to the next London session. All right, so far we already generated 5%, right? And this is just in one day. This is just the plain model without any confluences. This is just showing how extremely powerful this is. Let's go over another day of backtesting. All right, so if we take a closer look, we overall have a bearish bit of structure here, right? We are clearly in this bearish leg. If I had to map out the structure, I would probably be starting somewhere over here just before midnight. And then this to me would be the structure. So what I would like to see is some of this high being taken out for us to take a continuation trade. It wouldn't have to be the extreme. I would be more than happy to look at minor structure in this bit. And now it seems like we are flipping bullish. So now I would be looking for bullish entries. And now I would be bearish again. And if you see me switch from bearish to bullish to bearish, I would likely be sitting on my hands till we really get a clear direction, because we want to be catching continuation trades. We do not want to get stuck in a range, right? So at this point, I would be sitting on my hands until we get a really clear direction from the market, which we do right now. So we are clearly bearish at this point. Now, right here, it might be that we are simply pulling back, right? If we take a closer look at this massive leg that we have, we might just be pulling back to around equilibrium. If we do push up to really deep premium, I would be considering this a rangy day. If we do, however, get a reaction to something like this, then I would still be considering shorts. And if we do not see anything like that, I will likely skip to the New York session here. To me, this is a really beautiful reaction. So if we consider that we are bearish indeed, we are starting to form some bullish structure, and now we see a clear bit of intention to the downside, we could in fact consider taking a short off of the breaker block here. This to me would still be a continuation model because the overall trend is bearish. And this would be one of the more complex examples, but that is exactly how I would trade this system. So right here, let me remove the big premium and discount zone. Here we can see that we can take an entry off of the premium fair value gap right here. And I would be placing my entry right at the equilibrium zone, cover that high right there. And as for my target, I'm going to target the low hanging fruit, so the nearest bit of liquidity. Place my order here as a limit, and let's see if we get filled. Seems like we might get stopped out, and price starts to rally on down, and boom, we take 4R of profit with this really simple model once again. All right, so it seems like price is really starting to slow down here. We're stuck in a range, so at this point I will be skipping to the New York session, and let's see if we can catch anything over there. To me, I would not be looking for any bullish trades at this point, just because how heavily we've been trending to the downside. So in this session, I would likely be sitting on my hands until I see a clean bit of displacement to the downside. And this to me, for example, is starting to indicate that we want to start pushing price lower, right? This really strong leg to the downside here. This is a really steady recovery up, and then we see this really sharp move down. That to me is indicating that we are indeed still in the tendency of making bearish moves. So now I would like to see one of these highs being swept. If we do see that happen, like we indeed do right here, as you can see, we sweep this high. We then have a really strong market structure shift. And then we have this massive fair value gap right here. If I were to take an entry off of that, I would be taking an entry in confluence with the breaker block that we have right here. And this to me is a strong breaker block because this actually reacted to this previous order block, as you can see. So to me, this becomes a valid breaker block. So for me, I would be entering short right here. I would cover the top of the fair value gap right here. And as for my target, I would say the low hanging fruit, but because the low hanging fruit is just 1.5R, I always aim for 2R trades. I'll be aiming at something like this. Let's place the order, see what happens. We get filled, the breaker block seems to hold, and we already make our money. We have a really strong push to the downside here. Let's see if we get another setup here. It seems like we started to really displace above this temporary high that we created here. So we might see a shift in structure here just because of how powerful this specific leg right here is, right? So we see a really strong move down, a little retracement, a push that attempts to go lower. We only softly displace below this low right here, which indicates weakness. And then we have a really strong push upwards, which could indicate that the market is now going to be reversing. So at this point, because we are nearing 10 a.m., there is indecisiveness in the market. I am not looking for bullish entries right here. I'm not trying to catch a falling knife. As you can see, we've been trending bearish all day. I'm not in the mood for catching a falling knife. So I just purely basing myself on this model, I would not be taking any trades for the rest of the day anymore. So I'll be skipping to the next day. All right, so coming up to the London session here, as we can see, we've been trending really bullish all day. So now I would be looking for possible bullish entries after a sweep of a previous low that we have. So if I take a look at what the previous low would be, that would be this low right here, or of course we could sweep this low right here and then have a push upwards again. If we do, however, go back to this low right here, then the market structure shift would just be too high away and I would not be catching any entries. Let's see what the market is going to do here. So it seems like we do indeed sweep that little low right here. Let's see if we get the market structure shift. We do actually get a market structure shift here. Let's quickly pull our premium and discount zone. We do have a fair value gap right here, and the breaker block up here is in quite the premium zone. So for me, I would not be looking at an entry off of the breaker block. Perhaps if our leg can extend a bit more, we do start to extend quite hefty here. So I could potentially take an entry off of the breaker block right here. And again, our stop loss is going to go below the low of the last fair value gap. So that is going to be right over here, right? Because we have the fair value gap right here. And then the low of the candle before that is going to be this. So that is why our stop loss is going to be here. And then again, since there is nothing visually that I am able to target here, I will be targeting 2R. And I am specifically not going to the higher time frames and looking at any other confluences just to prove how strong this model in and by itself actually is. So we have a buy limit set. See what happens. We get filled and have a decent reaction. Seems like we might get stopped out here. All right, we almost got stopped out. And that just shows the strength of how strong this stop loss placement with this model is as well. As you can see, we almost managed our risk to the tick, right? This is extremely, extremely powerful. And now it seems like we're going to hit our take profit. And indeed we do. Let's see if we can catch any other trades here. It seems like the market is really slowing down. As we can see, if we compare how many deviations this bit moved compared to this is really starting to show some lower volatility, which means that smart money is likely taking a break. So I'm going to skip to the New York session and let's see if we can potentially catch a continuation of our bullish trend. So what I would likely be waiting for is going to be this low taken out, then a continuation up higher with a market structure shift for me to then take an entry off of the breaker block, for example. Seems like we do get the sweep. That's perfect. So now the market, no, it seems like price wants to continue lower. For me, I am no longer interested in bullish setups. If it wanted to sweep liquidity, it did right here. And if we wanted to continue driving out, it would do so. If we continue to the lower end again, it is not going to be to collect more liquidity. It is likely going to be indicating that we are changing direction. And as you can see, it is the case right here. So we are indeed changing the overall trend direction, it seems. So let's wait for a sweep of a high, and then we can catch a continuation of our bearish trend right here. It seems like we do have a candle that's indicating that this was a sweep, a nice little pin bar, and we do get our market structure shift here. So this to me is a really clean sweep. We have our breaker block right here, and the candle before our fair value gap will be this one. I'm going to wait for price to display lower. That's perfect. Now I'm going to place this order right here on the breaker block. And I'm going to be targeting the nearest low that's around 2R, which is going to be this one right here. So I'm going to be targeting this trade for 3.79R, but I might take partials here because this is not the direct low hanging fruit. So let's see how this trade actually plays out. It seems like price went without us, which is honestly not an issue. We didn't really create a significant new low here. These closes were not really convincing. So I would consider a pullback to around equilibrium pretty likely. And if we do, I don't want to see this broken. I think I'm going to leave this trade open simply because we didn't take the liquidity here just yet. Like if we take a consideration of ICT concepts, we just initiated a double bottom, right? So all of these support and resistance traders are eyeballing this level. They're going to be taking buys where we are going to get out of our position. And everyone is trapped in longs right here. So I would be really, really interested in taking a short around equilibrium here. And it is still a valid entry for our continuation model as well. Let's see if we get filled. Seems like we're not going to get filled on this one. Oh, we do get filled, and that was quite a scary move. And again, this is showing the strength of ICT concepts. Once again, we have our fair value gap right here. You remember? What do we see? We mitigate that fair value gap to the T and have an insane reaction. So this was just a bit of rebalancing. And now let's see what price does. It seems like it's going for our TP. Might consider getting out of my position if we do violate this high one more time. Because we rejected this low so many times, we broke above this one, and it seems like price is again heading up there, and that it's basically telling me that because we just swept this low again, I'm going to take some partials here. So what I'm going to do is I'm going to take 50% of my position off, and I'm going to move my stop to break even to avoid a loss here, because I do not want to see price go above that high here one more time. And it seems like that might have been a good decision because our stop loss would have indeed been hit if I didn't manage it like this. So this could have been a proper loss if you are not able to manage your position. And again, the elite members will know exactly how to manage their positions and will have the same vision at it as I do. All right, so those were just 3 trading days with the simple model on one single pair. Like, I don't have to tell you how powerful this model is, I think. I mean, this is 14.4% in just 3 trading days. This would pass any prop firm challenge. You could even go with 0.5% of risk and you would have still almost passed most prop firm challenges. So this is going to conclude the video. If you want this model but an even stronger version, then I do recommend you to join the Elite program. I will be dropping the confluences real soon, so I haven't dropped them just yet. If you join, you will see them pop up next week and you will be able to join in on all the fun and research. The last thing I'm going to do here is quickly show you the analytics. Right, so these are the analytics for our model right now, and by no means am I claiming that this is a 100% win rate strategy. That is not the case. This is not a 100% win rate strategy, but with the right confluences, you can crank this up to almost an 86% win rate strategy. And all of this by reading basic market structure, using premium and discount, and then the additional confluences that I will be dropping to the elite members. So if you are interested in that, make sure to join the Elite program. You can also come and check out the free Discord channel to gain some more value and insights, and check out the testimonials right there. All right, guys, thank you so much for watching, and I will catch you in the next video.